morning everybody, welcome back to the channel. Today is another interesting video about how to spot a reversal pattern. It could be on a 4-hourly time frame, it could be on a daily, it could be on a monthly, depending on what type of trader you are. Doesn't matter. This is something that will be useful for all of you. Now we will actually explain this candle here, and we will spot the reversal. What we will do, we will talk about market theory, price action, explain the story behind these candles, because as you know, these candles are just footprints. They explain what has happened in the background between sellers and buyers. So without further ado, let's start. Okay, so as you know, if you're new to this channel, we always start explaining the 4 pattern candles or 4 pattern candlestick with 4 candlestick pattern. We start with the first candle. So let's try to understand what is happening here. So if you look at this print here, we see a balanced candle. So some can call it a bearish engulfing candle, some can call it a balanced candle, but this candle here has a significant body size. We can say it's got equal size of wick at the bottom and at the high. So remember, this is the high that the price printed, this is the low, and this is the open and the close, right? So let me, for more clarification, so this area here is the open, this area here is the close, right? So basically this is what we see. Open, close, it's a balanced candle, and as I always like to visualize a little bit the volume profile, I think it gives a better idea on what tends to happen. You could think of it as this is what the volume looked like on that day, right? So basically price exchange was quite high in this area, right? And this is where we close the candle. So there's a lot of price exchange here. So I think so far so good. We can keep it like that. It's clear our understanding. Something I want to highlight is if you look at the EMA7, the EMA7 is quite trending low. So we are trading a bit far away from the EMA7. Remember, the EMA7 is in orange, and it tells us where the market came from. So for the last 7 periods, it looks like we were probably somewhere up here, right? And price kept on going down, and we seem to be trading below the EMA7, which is obviously, it could be that it is indeed a bearish market. And given that we have a balanced candle far from the EMA7, it shows to us that sellers were interested in this price. So sellers are bidding lower the price because they believe price should go even higher. To them, it should go even lower. To them, this is a high price, because for sellers to buy at a specific area, it means it's a fair value area for them. To them, because people tend to sell high and buy low, to them this is a high price. But for buyers, this area here is a low price. They're expecting to buy here, probably thinking the price will go back to the moving averages, right? Okay, now let's go to the next candle. This is the next print that we see. So again, bearish candle. As you remember, this was the high value area. This is the value area here. We see price open at this level. Price pushes higher into that balance area, into that range, right? We're not able to go back to the high, so it does a lower high. But what we see is that the liquidity is swept. So we sweep the liquidity at this area. I'll show you, right? This area here is sign of liquidity sweep, meaning there was some liquidity here, price went up, and sellers immediately sold them back down. So the sellers were aggressively selling that. And remember, here we said that the sellers believed that this area here was really relatively high price, and that's the reason why they sold aggressively. There wasn't enough buying pressure, enough buyers or enough institutional buyers, so price pushed all the way back down. But notice this, we even went below the previous low. So the price broke through the previous low, and the sellers kept on selling it until we closed right at the low, meaning if you have to draw the volume profile, probably something like this for that session, right? Probably something like this, right? You could have made it also like this. Let's not complicate this for a minute. I'll remove this one, okay? And let me draw, for simplicity, this. So draw something like this, right? Because you close at this area, it means there's been a lot of probably price exchange happening in this region. It's very interesting, right? And every time I see price close right at the low, it could be telling something. It could be telling something. It could be telling that the sellers were trying to push hard enough to push price much lower, but they couldn't do it. They couldn't make it, right? So therefore, buyers start. We could expect buyers to start coming in at this area here, right? Because you didn't see any wick, but it's remarkable to see that price stopped right here, and we see again the EMA going all the way down. So if we go next second, something very interesting. So now we start seeing the EMA 21 appearing. So we know that we're definitely in a bearish market. The sellers kept on selling in this area, so the balance kept on going down. We never saw buyers. Buyers were here, but they were defeated heavily. We come to this area here, price opens here, buyers try to push it slightly higher, sellers come back rushing down into this market. So the sellers really believe that this is still high price. They want to push price lower. But notice this, they push price all the way down to this area, sweeps liquidity, we get massive amounts of buyers coming in, and they push the price all the way back up. So it means sellers were not able to defend the price at this lower area. So this is indicative of something that could be very interesting. It could be that the sellers now start thinking, okay, we've been selling without much resistance at this area, but we come to this place and we start seeing resistance, we start seeing buyers presence. They're able to push price all the way now like camp, right? But this is as far as buyers could get. They could only get at this area here. So something began to happen. Buyers may try to be more confident, given that we're trading far away from the EMA 21 and even far from the EMA 7, and more far away from the EMA 21, even further away. So very interesting. So if you look, it looks like this is the balance area. So we see some sort of leveling here. Let me draw that for you, right? It appears some sort of leveling of the value area. We seem to be leveling, which should be interesting to the buyers. Okay, then the next candle is even more interesting. We get a very small doji, a very small balance candle, and this is telling us something. There's a fight, right? There's a fight between buyers and sellers. They are actually fighting to see which side is going to get control of this market at that moment in time. We see that buyers came in at this area. They were not successful to push price higher, but what they managed to do, they managed to get the sellers nervous. Why am I saying that? It's because price doesn't go any lower than this area here. So if I was to draw an area for you, price doesn't go closer. I mean, it went down, fine, it went back up, but we're not able to close. We're not able to trade massively below this area. So it could be telling us that actually buyers are coming in, because think, buyers push price all the way here. They never even allowed price to test this region here. Price kept on staying here. I think this is a strong indicative sign that buyers could be back into this market. And look at this, right? Look at these highs. So we kept on doing lower highs, lower highs. Some sellers got trapped here. This is probably an area of trapped sellers. I'll put TS. Trapped sellers. So the sellers that sold here are now nervous because we are now closing even above where they sold. So this is nervous for them. The sellers that sold here probably will put the stop loss here, and they'll try to exit the market at this region here. So if the next candle closes higher than this area, we know that we could be in for a reversal, especially at least something, a reversal all the way to the EMA 21, because we've been trading for now some time below both EMAs. All right, so this is what we can see. So I think this is a strong reversal sign. So let me do that. What are the reversal signs here? The reversal signs are, one, we're trading far away. We've been trading far away from the EMA, so that's fine. We've been having some balance candle, sellers and buyers fighting for this, but sellers overcame. We closed quite at the low here. We break it through, but we're not able to close below this region. The next candle is a balance candle, meaning even a more smaller candle, and this is where we get. This is where the closing price gets. Sellers might be nervous. We're expecting some stop loss. And usually in reversals like that, we always need to have some sort of area where we can squeeze sellers or we can squeeze buyers. Reversal does not happen without these things. So when you start saying sellers were confident, but they start becoming nervous, it's a good sign that we could be in for a reversal. And the reversal would manifest like this, because once we print a candle like that, right, price starts to go above like this, all these sellers that were here are now cooked. They have to begin to buy, and as they buy, it puts fuel into the fire to push higher, right? So let's go to the next candle and see what happens. So these are our 4 candlestick pattern, and when we go next, look at what we see. Bam, bam, we break through this area. So the sellers that sold here started buying because they're like, no, I don't want to take the risk. Some that sold here were trapped because they sold way low, and these guys are just crying now, like they're super nervous, they're exiting the loss, and price comes to the region here. Next candle, bam, we go back. So this candle alone swallowed 3 bearish candle. This is very interesting, right? This candle alone swallowed 3 bearish candle, and the next candle obviously swallowed. So in 2 candles swallowed 4 candles. 4 candlestick, 4 price action candles were swallowed in 2 candles. So this is a good sign that actually we're reversing. And look at this, we close above the EMA 7 here, and we close above this EMA 7 even further here. So we could expect some sort of continuation, or maybe some balance candle here. As long as we close above the EMA 7, we can expect some continuation. All right, I hope this was super instructive for all of you. I had fun making this video, and let's keep learning. Let's keep and someone might ask me, well, where do I put my entry, right? I think entry, stop loss, your entry could be here, and you just don't want this candle to be broken. Obviously, sometimes you might see that the price could come way below here to get a bit more buyers, or shake the sellers out, get more buyers and go back. So I would probably, if I was to trade this, usually what I do, I have 2 entries. I put an entry here, an entry here. So these are entries, right? And probably, so my average price is probably somewhere down here, because I don't want to miss the boat. I refer somewhere down here, and I can put a stop loss somewhere at this level, because if price comes all the way to this level here, usually when you get a week like this, price won't come and retest this in this scenario of reversal. So if it comes all the way down here, I'm not interested. But what I would be expecting is a push higher, right? Something that will give me a 2-for-1 or 3-for-1 risk reward ratio. All right, thank you everybody. This is the end of the video, and see you next time.